for how we come up with the rating and what the criteria. More than what our analysts have explained, and especially for Vietnam. I hope some of you know very well the rating practice and risk management practice, but for Vietnamese investor, we have a lot of questions about the use of our rating results. And this section, I would like to introduce Ms. Prachi Gupta, our financial advisor, and she working with our team very details, and she will present and have a discussion this topic. So Prachi, please.
Thanks, Mr. Hoang. Hello, everyone. My name is Prachi, and I hope you're finding the session insightful thus far. I will share with you our methodology and give you some comparison with global credit rating agencies. So in this slide, let's talk about what are really the similarities in the criteria that is followed by FiinRatings, and then compare it with what the other rating agencies globally follow. So the analytical approach that FiinRatings follows is largely comparable with what other rating agencies follow, which means that we first analyze the economic and industry risk to assess the macro impact on the company that we are rating. FiinRatings would then do a comprehensive quantitative as well as qualitative assessment of the key credit parameters of the rated entity. And this is done based on the information that we get from the company, the financial data that we seek. Along with that, there is a detailed discussion that we would have with various business heads and senior management of the company. We would first assess the company's business risk profile by analyzing its business position in terms of the experience that it has in operating in the line of business that it does, the competitive position and the market share that it enjoys, the pricing benefit that it would have. Once we do that, we also would assess what is the kind of product and geographic diversity that the company has, and also look at the operating efficiency in terms of the stability of its revenue streams, the kind of cost structure that it has. So all of this together will enable us to have an opinion on the business risk profile of the company. Once we do that, we then move to the financial risk profile of the rated entity. And this is done largely in terms of assessing the capital requirements that it would have in terms of meeting its future business plans. What is the kind of current capital structure that it has? When I say capital structure, it also means the quality of capital as well as the resources that the company raises. What's the kind of concentration that it has on the lender base, the relationship that it shares with its lenders, as well as the current and expected leverage of the company. We would also assess the company's financial and governance policies, the experience and integrity of the management team, and very centrally assess the liquidity position of the company to meet its obligations in a timely manner. A combination of this business and financial risk assessment will enable us to arrive at what is called as the standalone credit assessment. Subsequently, we would also assess the company's creditworthiness of, largely the overall group. There could be a situation where the rated entity is part of a larger group. So we would not assess it in terms of, just a standalone company. We would look at the overall business, the overall group, what's the kind of debt that the overall group has, what's the credit worthiness of the group, as well as the extent of support that this company can get from its parent, in case there is a requirement in future. So if we believe that the entity is strategically important to the parent or the group, we would take an assessment of notching up the rating from its standalone assessment, and then finally arrive at the issuer credit rating. So this is largely, our methodology, I would say, and it's fairly comparable with what other rating agencies, centrally follow as a process. Now let us look at really what are the differences in the criteria that FiinRatings follows, and then compare it with some of the other rating agencies. So the global credit rating agencies like S&P, Moody's, etc. rate debt on an international rating scale. And therefore, the sovereign rating of Vietnam, which is BB by S&P and Ba3 by Moody's on the global rating scale, will really act as a ceiling in most of these cases. What this means is that most of these Vietnamese companies, which are rated by global credit rating agencies, would be at or below the sovereign rating of BB. However, in FiinRatings, because it's a domestic rating agency, our scale is that of a domestic rating scale. Now, what this does, it provides a superior credit assessment or differentiation among issuers and issues within Vietnam. And what we do is we use the sovereign rating of the government of Vietnam, which is of course assessed at the highest rating of AAA on the domestic scale as the benchmark. And therefore, this approach allows the investors to have greater differentiation of issuers that we rate across the entire rating spectrum based on their credit profile. So here you can see the table on the left side of the slide indicates really that if it's a global credit rating agency, the companies that would be rated by that agency in Vietnam would be capped at the maximum of the sovereign rating. Whereas being a domestic rating agency, you would have access to the entire rating scale, and therefore you can actually differentiate companies in a better manner based on their credit profile. There's one more difference that we believe is that, which is on a broader level on the debt markets and the nature of the debt instruments that are being used thus far in Vietnam. We believe that the debt markets in Vietnam are still evolving. And therefore, most of the borrowings that you see corporates and financial institutions, which they make, is largely through conventional forms of debt like bank loans, certificate of deposits, etc. So therefore, the extent and type of innovative instruments that you see globally being used in the form of hybrids, convertible securities, the extent of securitization and credit enhancement tools that companies tap outside of Vietnam is something which is still evolving in the country, but we still believe there is a large scope for growth given the economic prospects that the country has.